Welcome back, everyone. We heard from three analysts laying out their forecasts for the markets over the next 4 months. But how can you act on their recommendations today? That is the subject of this week's Picks and Pans. Larry Edelson told us that he expects the bull run in gold to continue through the end of the year. So his pick is the SPDR Gold Trust ETF, ticker symbol GLD. It is the oldest and largest of the exchange-traded funds that buy gold bullion. Each GLD share represents about 1/10 of an ounce of gold, but it's without the hassle of storage and shipping. This fund is up about 30% over the past year, and Larry expects that growth to continue. Monty Agrawal also likes commodities, but he's focusing on agriculture. Food prices have seen a huge jump over the last couple of months, mainly due to those fires and drought in Russia. Those gains have been reflected in the PowerShares DB Agriculture Fund, which is Monty's pick. He recommends waiting for dips in the price of that ETF and then buying, because regardless of the global economic situation, demand for food is likely to remain strong. On the opposite end of the spectrum is a sector where demand is closely tied to the economy, and that's consumer discretionary. Monty points out that there are very few jobs being created and confidence remains low, meaning consumers are not spending their money on items that they don't need. So his pan is the Consumer Discretionary Select Sector SPDR, ticker symbol XLY. It has been trending lower for the last few months, and Monty thinks it will continue to drop as the economy struggles. Larry takes this viewpoint even further. He recommends that investors drastically reduce their exposure to U.S. stocks. He sees the Dow Industrials falling back to at least 9,000 within the next couple of months and possibly even hitting 8,700. So his pan is the SPDR Dow Jones Industrial Average ETF, ticker symbol DIA. Like the blue chip index, it has been up and down over the last few months, but Larry thinks that's about to change. So if U.S. stocks are in trouble, what about international markets? Well, as we heard from Rudy Martin, many of them are poised to take off. And one stock likely to reap the benefits is Panama's Bladex. It provides financing to commercial banks and corporations all over Latin America, and it may be extremely undervalued. Right now, Bladex is trading around $12, or 60% of book value, but Rudy thinks this has potential to double in price. However, while Latin American markets may offer incredible growth potential, not all stocks will benefit from their gains. One company Rudy thinks investors should stay away from is Cemex, the Mexican cement producer. It is one of the three largest cement companies in the world, but it still has billions of dollars of debt on its books after buying an American rival back in 2007. And it relies heavily on the U.S. for business, so continued weakness in our real estate industry is likely to hurt Cemex as well. Now, coming up next, we're going to talk to two money managers about their strategies for playing the markets over the next 4 months. Plus, a viewer's take on Australia and a final comment from Martin Weiss. We're back in a moment.
Hi there, this is Mike Larson, editor of Weiss Research's Safe Money Report. You can't just focus on stocks anymore if you want to be a successful investor, and you can't just focus on the United States either. You need to know what's going on in Asia, which Tony covers. You need to know what's going on in hard assets like oil and gold, which Sean and Larry are on top of. You need to know what's happening in currencies, the specialty of Brian Rich. You also need to keep abreast of the best ways to build wealth in an era of near 0% interest rates, and that's what my colleague Nilis Mativ covers. And of course, you need the top-down, big-picture analysis that Safe Money delivers to you each and every month. Best of all, the Weiss Elite membership gives you access to all of that and more. The Weiss Elite gives you the tools and knowledge to profit from all of these market developments. Now, I may be biased, but I think it's a no-brainer, and I'm glad you're one of the smart investors who recognizes that fact. Thanks for your time.